What's going on, everyone? My name is Nicholas Merton here at DataDash, and today is November 2nd of 2017. Well, folks, as you all keep up with the channel, you know that from time to time I like to share a trading tip or two here on the DataDash channel. And today we're going to be talking about the stark differences between investing and trading in traditional stock markets versus trading and investing in cryptocurrencies. Now, as you all know a little bit about my background, I went from trading in stock markets for about 6 to 7 years and took a lot of that experience over into cryptocurrencies. And a lot of it has benefited me. There are a lot of correlating similarities in the sense of technical and fundamental analysis in relation to stock markets and cryptocurrencies that they both share. However, at the end of the day, there are some very stark differences that split the two, and they're very important to understand if you're going to be making that transition over from investing in stocks over to cryptocurrencies, as I know many of you are. So whether or not you're an investor or trader with 10 years of experience, someone who might have 1 or 2 years of experience and overall in stock markets, or you might be someone who is interested in stock markets, learned a lot of principles, and was about to enter but is now starting out in cryptocurrencies, this video is going to be a great resource for anyone out there. So that being said, let's go ahead and jump into it. The first thing I want to talk about is differences in momentum. So right now we're looking at a chart here for Vertcoin versus Bitcoin, and it has been one of the few winners over the past few weeks in this kind of bearish altcoin market, trying to keep up with Bitcoin. Well, Vertcoin absolutely killed it, and it did a great job over the past few weeks. So in regards to Vertcoin in this example, going back to the topic, we want to talk about the differences in momentum. As we can see here, Vertcoin went from around 20,000 Satoshis to 95,000. And that's not to mention Bitcoin was also going up at the same time. This means that generally speaking, this multiplied in values over and over and over within the course of really just about 2 weeks. That's not something you traditionally see, especially in stock markets. So momentum in cryptocurrencies is very quick. Now there's a reason for this. It's a very early industry. Cryptocurrencies only really started trending big this year in 2017. We really have to let that perspective kick in. In the early part of 2017, Vertcoin, along with Bitcoin and other cryptocurrencies, weren't valued anywhere close to where they are nowadays. The industry is moving very quick, and because of that, there is a big shift comparative to stock markets. What is seen as a big return in stock markets looks like pennies in cryptocurrencies. For example, if you were to ask an investor what their yearly return was, they're like, oh yes, I beat the S&P 500. I made a 7% gain year over year. In cryptocurrencies, that almost seems laughable because in a lot of cases, you can make 10 to 15% consistently a week if you're in the right cryptocurrencies and you diversify properly. However, there's also something to point out as well. What usually comes up also comes down as well. And much like how in stock markets, when we have a 1 to 2% daily gain, we'll probably have a 1% pullback. We'll have an equal amount of pullback. But in the same case of cryptocurrencies, things move up very quick and they also move down very quick. So again, this is a very generally big topic, but it's something you have to know that plays both ends because so many people get caught up on this side and they think it's never going to end. However, there are pullbacks. It is just like stock markets in that sense that you will have not only run-ups, but corrections, okay? And Vertcoin's getting that right now. That's why you don't want to get greedy. That's why you want to have locked-in sell levels to get out. For example, in the Vertcoin trade, I closed a lot of my position, I think generally around the 70,000 Satoshi range. Now, did I sell it at the top? No, but I knew that momentum will eventually slow down, and I knew things were going to get a lot more volatile and shaky, and it did, and it pulled back. And what comes up will come down just as fast. I think there's a saying that I say on my channel that's ingrained in everyone's heads by now. Exuberance can make up all the difference in just a few days. That is a time-tested, statement in traditional markets and also in cryptocurrencies. So I guess that's almost a little bit of a similarity as well. But at the end of the day, it's a big difference in the sense of how fast things are moving. And I think this will be relevant for the next 3 or 5 years, especially in cryptocurrency, seeing as we still have a long way to go in the sense of adoption. Next up, we're going to talk about Stratus right here, Stratus and BTC. Now, my main lesson with this one right here, I know I use Stratus a lot for examples, but the main lesson I want to drive in here is that you cannot just simply buy things at a low. there are cryptocurrencies in the space that in the next year or so will be relevant. I can't give you a specific number, but the main thing I want you to really kind of hone into your mind is that around 90 to 95% of all cryptocurrencies you see right now trading for relatively high valuations are going to die out in a year to 5 years. It's just the truth. It's the reason why I stride to tell you all diversification is necessary in cryptocurrencies, and that you simply cannot just buy something low and think, oh, don't worry, I don't have to set a stop loss. I can just simply buy something and not have to worry about it because I'm buying it on the low end and all crypto goes up. That's not right. That's excessively off course of a true investor. You have to understand that we are living in something very similar to the dot-com bubble. This is something that the NASDAQ experienced back in the late 90s to early 2000s. And we'll take a look at it right now. Now, you might look at this chart and say, oh, wow, that looks like the total cryptocurrency market valuation. Kind of what we're going through right now. Now, of course, I think cryptocurrencies have a ways to go, but the dot-com era was when internet first came out. It was when internet really started to see some potential in the internet. We started seeing websites popping up and people really engaging with personal computers. The same thing's going on with cryptocurrency right now. There's a lot of excitement and a lot of FOMO to get into the general industry. Not only investing, but also creating new ICOs, creating new blockchain projects that are getting valued at tens, hundreds of millions of dollars, if not billions. So we have to consider the fact that usually what can come up like this can come crashing down as well, because a lot of the companies that came up during this time in the NASDAQ, that came up during the dot-com bubble, were companies that weren't even profitable, they weren't practical, and they had no real value proposition. I can give you an example story. I always love this one. Now, of course, there's the standard ones like pets.com and a few other ones like that. But the one that I always liked, and I can't think of the name of the company, but I remember reading a book, and I really recommend you check it out if you're interested in learning about this kind of craze back during the late 90s. It was called Dumb Money, and it was the stories of a day trader. And he was talking about how one day there was a company that IPO'd that all it did was sell chocolates. Kind of like a spin me on coin. It's it's a very tailored niche market. And basically the only thing they had was, yes, we're just going to sell chocolates. And then of course it IPO'd up at something ridiculous like $80 a share and was valued at tens or hundreds of millions of dollars instantly. They didn't make a dime of profit, but it's that craze, it's that hype that comes in and people get carried away. And it happened with so many IPOs or initial public offerings in the stock market. And you can get that same kind of hype as well. Things die off over time. Now, I'm not railing on Stratus. I'm just saying, just because you bought something at a low doesn't mean you should avoid setting a stop and just think you're set for life. Because to be honest, especially in this case scenario, you wouldn't be set for life. This would not be a good trade or investment. So keep in mind, 90 to 95% of cryptocurrencies are going to die off. Set your stops and diversify. Pick winners, okay? And the last one I want to talk about, and this one infuriates me. Now, to be fair, I understand that a lot of people in cryptocurrencies, a lot of people have actually been holding Bitcoin for a few years that I know. And they've been, telling me Nick, I want to get more into this kind of whole cryptocurrency thing and stuff. But I think I'm just going to hold Bitcoin. I've been in it for a while. And they tell me that's probably the best way to go, right? No, not at all. Now, a lot of the times people will say well, Nick, if I'm not holding Bitcoin, it's doing well right now, then I'm losing. Folks, let me tell you something. Can you name me one stock or company that at the end of the day you'd feel comfortable holding for the next 10 years? I know that sounds like a silly question, but if you can't answer that, then you shouldn't hold one stock, and you shouldn't hold one cryptocurrency. Now, as much as we all love Bitcoin, it's the granddaddy of cryptocurrency. It was the first one ever to really introduce blockchain and create this digitalized currency. However, do you have proof in your head or some concept that gives you complete confidence Bitcoin will be not only the leading cryptocurrency, but still be around in 10 years? If you don't have that, you should not put your money into one single cryptocurrency. In a market where we're predicting 90 to 95% are going to fail, that's not a good call. a lot of people look at it like this, and I think the reason why there's a misconception on it is because people come from trading in the stock market, and what they'll usually see is either blue chip companies or they'll see index funds. They'll see trading the different indexes like the NASDAQ, the S&P 500, or the Dow Jones, the Russell, all those kind of, different players in the market that they can hold and play diversified. But they look at it as almost like owning one single asset, which you're not. You're holding a wide range of different class assets across the world. In this case, you're buying one digital currency, okay? Though it is massively adopted and stuff. And if you were going to hold one coin, yes, Bitcoin would probably be the best one to hold for, long-term stability. But at the end of the day, Bitcoin's not perfect. It's very outdated technology, and there's a lot of other players in the space that you can look towards. So remember, diversification. I'm going to keep on emphasizing it. But again, this is something that it's very akin to markets as well. But I think one of the big misconceptions is that people treat Bitcoin like it's an index fund, and it's not. It's not the all-seeing, like if cryptocurrencies go up, Bitcoin's going to go up. Yes, that's been correlated so far and has been true so far because it's the leader, but things can always change. Things like Ethereum came into the market, and that shook things up. That took a lot of dominance in the price ownership of the coin market cap, total market cap valuation from Bitcoin. Bitcoin has lost a lot of its dominance in the market, and it can continue to do that even though it's continuing to go up. So keep that in mind, okay? We want to stay diversified. We want to, assess our risk and spread that across so we have limited risk, all right? So to recap, let's go through those 3 principles once again. Momentum is much different inside cryptocurrencies than it is in stock markets. Keep that in mind at all times. Don't get carried away. Second thing, 90 to 95% of cryptocurrencies are most likely going to fail. Keep that in mind when you're buying your long-term portfolios and also if you're trading for longer periods of time. Make sure to stay diversified and set your stop loss because things can continue to fall through even if you're buying at a low. And the last one, don't just buy Bitcoin. Diversify. Hold multiple different cryptocurrencies if you're going to be investing in cryptocurrencies. Diversification is key, all right? And even though it might not maximize your returns, it's best to do it for safety reasons, just like how we store our stuff in a wallet. We want to have that safety and security for the long term. All right, everyone, that's it for the video. Thank you all so much for watching. Sorry if I continue to ramble on about a lot of the same things, but you all know I just want to emphasize what I'm saying. These are big principles to really take in, and I promise you, if you can take in these principles, you will have a much higher chance at succeeding in the market. It's not extremely complicated. It's not always, doing technical patterns on the screen. A lot of it is philosophy. A lot of it is approaching markets with the right mindset and taking a lot of those similarities from stock markets and applying it into cryptocurrencies, but also learning their differences. Anyways, everyone, that's it for the video. I'll talk to y'all later. #long-term investing. Stay tuned.